Alrighty, should be good to go. How we doing, guys? Happy Sunday. Make sure the audio is good. Alrighty. How we doing, guys? All right, we're at check on the audio. You guys should be able to see the Forex Factory. Hope we're doing well. Hope we're ready to get back to making some money this week. So I originally was not planning to be live today because it is non-farm payroll protocol, and I'll touch on a bit more what that means for myself, my team, how we attack this particular week, which, as you guys know, if you've been trading for any length of time, is slightly different than all the other weeks. But because I still wanted to get on with you guys, share how we're going to take on the week, I actually had a question within my community about how the week will be taken on considering non-farm payroll. So I figured I'd get on here, do a short one with you guys, share what I'm looking at, how, again, myself, my team, how we attack these weeks. It's the same thing that we do every week. Nothing changes in our protocols, our strategies. We do the same thing month to month, right? And that consistency obviously brings us those consistent returns. So with that in mind, hope you guys are having an excellent Sunday and ready to get to it here with you guys. Thanks for getting on with us. My pleasure. Glad to be here with you guys. All right, so taking a look at the Forex Factory here, as you guys can see, Monday, no high impact news, Tuesday, high impact news, and then high impact news every day through Friday. So the general protocol that myself and my team use for these weeks is focusing on Monday and Tuesday. Right away, the next question I usually get is, well, I thought we don't trade Mondays. I do trade Mondays on non-farm payroll week. So when it is non-farm payroll week, I am actively in there trading on Mondays, just for future reference. Tuesday also has high impact news, so I'm expecting that to be a good day as well. I'm looking to get my setup Monday, going into Tuesday, get paid, and I'm done for the week. I may come back Friday, right, because we can trade after the non-farm payroll release at 8:30, and that is a tradable event anywhere from 15 to 30 minutes after NFP hits the wires, depending on your experience and your skill level. So pretty straightforward game plan. It hasn't changed, hasn't deviated for the past 3 years of my trading. It is the same things that, again, we do every single week. So with that in mind, in summary, Monday, Tuesday, absolutely going to be in there live with the group, hunting setups Monday and Tuesday. Friday will likely be live as well for non-farm payroll, something we like to study. It's usually a good study to see how the market runs on liquidity and efficiency, and it's usually very violent on those days, and that'll also take us into November 1st. So with that in mind, that's what we're looking at on the economic calendar side of things, how we're going to look to take on this week. And now let's get into the charts itself. So I don't have the handy dandy PowerPoint today. Like I said, I wasn't even planning on doing the outlook today, but because I wanted to touch on how we're going to be engaging this week, what myself, my team, and our community do every non-farm payroll week. But I also wanted to take some time now that I'm here to touch on what we've been calling, what's been delivering, and also what I'm looking at going forward. Generally, one of the reasons why I wasn't planning on doing an outlook is because on non-farm payroll weeks, I don't use a daily, weekly bias very heavily. I'm still looking at top-down analysis like the video I made for you guys yesterday. I'm still doing top-down analysis every single day I'm trading. However, one of the things that I weigh less in my analysis on these weeks is daily, weekly bias. Why is that? Because many times it's an erratic week. So what I'm looking to do in my trading for these weeks is surgical strikes. Intraday liquidity pools, buy side, sell side, intraday liquidity, 15-minute time frame, get in, get paid, get out. That's what my trading looks like more on these weeks. So I'm not necessarily holding for the whole daily range and doing things that I do on other weeks. It's more getting in, getting paid, and being done. That's what I've found has been the most successful for me on these weeks and has yielded me the most results. But again, just because I'm not looking at daily bias or weighing it as heavily, it's not something that I just disregard altogether. So it is still an important component to what I'm doing. But if I have tools that I use, like top-down analysis, someone that knows how to use it will tell you when it's more effective and when it's less likely to be effective, right? And that's what I'm sharing here. So let's get down to it. Let's start here from the weekly time frame. Weekly chart, all of our targets absolutely smashed. Call in dollar higher. Weekly fair value gap was the draw. We've traded to it, through it, and now we're inside this weekly fair value gap here, right? So now dollar has been extremely bullish. Nothing's bearish about dollar. We're looking for higher prices, and we have been for the past 3 weeks, right? And that's just delivering the script, absolutely ripping higher, right? And again, it's not just the technicals. It is Commitment to Traders report that my colleague breaks down very well in our Sunday newsletter, which we send every Sunday. it's commitment of traders, it's seasonal tendencies coupled with technical analysis. So macro perspective is three things. There's three things that give us a macro perspective. Number one is seasonal tendencies. Number two is commitment of traders. And then number three is intermarket analysis. And those are the three things that are going to give you macro perspective to be able to see these monster moves. But all three should be present if it's going to be a clean price run like we've been seeing here. Just beautiful delivery every day, expanding higher into premium levels. But what you want to study, if you want to be able to observe and predict these types of price runs, well, you'd want to know what's behind it. And that's what I'm sharing here. COT, seasonal tendencies, and then what have bonds been doing? Treasuries have been cratering. So if you understand risk on, risk off, bonds are absolutely dumping. So it's no surprise that the dollar's ripping. Right? And then when those things come together, you have very high probability trades. And now for foreign currency traders, right? Now it makes it really easy what we've been giving you guys, right? Because dollar's going higher. So what does that mean for, whoops. Sorry. What does that mean for the euro? Euro is going to be absolutely cratering, right? Same thing with pound. What's the pound going to be doing? Dumping. Australian dollar, US dollar. Dollar's second in the name and it's bullish. So what is the Australian dollar doing? Selling off. Same thing with the New Zealand dollar, US dollar, selling off. So what's going to be higher probability for you in foreign currency, going long or going short? Obviously, it's a no-brainer, going short. But the key is how this information is all able to be seen before the fact and how you can use this for precision-based trading. Not guessing, not hoping what you're doing works, knowing why you're doing what you're doing. You're still going to take losing trades, but you're going to be in the high probability category, right? And this is how you start to ferret out these high probability, easy trades that you want to be taking. So daily time frame, extremely bullish here. Inversion, fair value gap. We dropped down into that institutional order flow entry drill, right? Called this real time, said I wanted to see this fair value gap here and this inversion support price and create institutional order flow entry drill. It did, couldn't even get down to 50% of that imbalance, leaving this gap open here, 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 and here, which indicates what to us as price action traders. The algorithm is in a hurry to take it higher. If it's in a hurry to go higher, where's it going to go if the market only moves to one of two things? Liquidity, inefficiency. Well, here we have liquidity here. We called that out for you guys 2 weeks ago. Liquidity here. And then we have the remaining portion of this inefficiency right here. Right? And then we've done what from there? We've traded to it, through it. What I say last week, if we're going to keep expanding higher, this fair value gap has to do what? Get above it, use it as support, and expand higher. Has it done so? Absolutely. Right? Drops down, institutional order flow entry drill here. Expands higher on this day. We open, trade lower into that daily fair value gap here. Use it as support, like a launch pad into the buy side. So again, the market only moves to two things. Trading is not that complicated. You just have to learn the right way. The market's moving to premium inefficiencies and premium buy stops. It's indicating it's in a hurry. It wants to reach there because of all the imbalances that are unable to get filled. Pretty easy, pretty straightforward stuff there. Market gets above it, expands higher, and now we have the buy side up here, which again are the fund level stop losses. What does that mean? Funds that are trading in the market, they have their stops and they're managing trades based off the daily time frame. So why is the market trading higher in such a hurry? Because there's real buy orders here, here, and here of traders that were short, but they have a buy stop at the swing highs. So the market's in a hurry to rip up into those stop losses and engage the fund level stops, right? Because that's where the big money is for smart money to take from uninformed, right? So very, very simple dynamic of what's going on in the markets. Markets running to highs and lows and inefficiencies. And if you understand market structure and order flow, it's going to tell you to trust what you're looking for and know to look for higher prices, right? And obviously going long foreign currency is a very difficult game to play when the dollar is ripping like this, right? So even foreign currency folks, and I haven't been touching too much on the Forex, I've actually altogether, I have no money in Forex. And altogether, I'm actually getting away from Forex more so. I'm not even swing trading it like I used to. But you guys can see, just because I'm not in the market doesn't mean we can't sort it out, right? So for foreign currency traders, we got you covered as well. Moving right along to bonds. And again, this is where the real precision comes in. So if you guys want to know how I also trusted, how my team also trusted higher dollar, it's also the bonds as well. So what were we looking at on bonds, right? Well, we had this weekly inversion fair value gap, which you guys can see here, right? It's this buy side imbalance, sell side inefficiency here, here, and here. I'm telling you the market's bearish for bonds, right? I'm not even expecting you to know all that because you're here taking notes, and eventually you will get to the point of predicting it, but I'm making it easy for you. I'm telling you what, bonds are going lower. Okay, great. What's going to confirm it's going lower? Well, if you remember this gap here, that before we even traded into it, I said this is a target. So we use that imbalance as a target on the downside. But because I'm not bullish, this fair value gap is not a buying opportunity to continue. So last week and last week's weekly outlook, which these aren't deleted, they're all there, so you can refer back to it yourself. I know with all the scams in the industry going on these days, it's really easy to be skeptical, but trust me, there's nothing to be skeptical about. We've talked about this for the past 3 to 4 weeks, so it's all there. You can't edit a video that's already live and uploaded to YouTube. So I said I wanted to see the market get below this inversion fair value gap, use it as resistance, and sell off, right? And it's done so. So what this allows me to trust is that the dollar is just going to keep ripping higher, right? Because again, it's risk on, risk off, and it's fundamentals, right? These are real fundamentals. If bonds are selling off, yields are trading higher. So if yields are trading higher, what does that mean for owners of the US dollar? People that own dollar can get a bigger return on their investment with the US dollar. So what does that do? It raises the demand for US dollar because the yield that you can get in return for holding dollars goes up. So whenever people talk about fundamentals, these are real fundamentals. And fundamentally, everything that you need is in the charts. Bonds selling off, dollar going higher, like I share with you guys all the time. I take you right through the bullshit and we get right to what matters and what gives you real insights to print money in these markets. So inversion fair value gap, we used that last week, absolutely smashing lower from that level, which is exactly what we wanted to see. And then again, that's what allows us to confirm and trust what we're seeing in the US dollar. And then obviously that makes what we're looking at in foreign currency very easy. Keep short in the euro, keep short in the pound, short Australian dollar, right? And you see it's relatively straightforward. Will you have losing trades? Absolutely. Will you be high probability though? Most definitely. All right, moving right along to the NASDAQ. So now that we got dollar sorted out, currency traders, you guys should have the business here for this week. Let's go to NASDAQ. So a lot of back and forth. NASDAQ's been really sloppy. One of the things that I've been doing to combat this, and again, this is because also the elections are coming up in a couple weeks. So because of that, the markets are very indecisive. So the way I've been combating that when I'm live trading, when I'm managing my own funds, I've been very nimble and surgical in what I'm looking for. I get in, I do my top-down analysis again, like I showed you guys yesterday. And then from there, I'm looking to pick my shots. Once I get the levels I'm looking for, I'm paying the trader and I'm not overstaying my welcome. So whenever the market is what would be looked at as choppy, and on a weekly chart, you can see all these wicks back and forth. But if we drop into the 4-hour, you'll be able to more clearly see what I'm saying. Right, not that clean a market structure here, right? Just a lot of back and forth, a lot of consolidation periods. But again, that's not to say there's no setups, because you can absolutely go into this price action and sort out setups every single day. What I'm saying is, though, is it's not the cleanest market structure to operate within. So while it is tradable, yes, you do have to be mindful of the market conditions that we're in. And it's very choppy, it's range bound, and it's not wanting to leave decisively higher or lower, right? Compare and contrast this price action to when the market's actually moving, expanding, moving lower, moving higher, retracing, expanding. It's very easy to trade the market when it's fluid. But when it's sideways like this, it's still tradable, right? We're still going in there, sorting out setups and making our money. But it is very important to be mindful of the market conditions that we're in, which is a lot of range-bound consolidation profile. I wanted to see Friday how we traded because we could have potentially left that range and then gotten cleaner price action, ended up trading higher and dumping right back down into the range. So just wanted to touch on the market profile side of things since I was already bringing that up on the weekly chart. And then that can clearly be seen here on the weekly with all this back and forth. Look at this. Wick higher, lower, up, down, up, down, up, down. Just a lot of back and forth. So a lot of consolidations and high resistance liquidity runs when it does start moving to targets. So what I'm watching in here, I still have a bullish outlook. I'm not calling a top in indexes. This imbalance here, we're watching that coupled with the order block, right? The order block's the down close. So fair value gap order block, we trade into that and then we expand higher. So order flow still remains bullish, right? I'm still looking for higher prices on the NASDAQ based off the monthly, weekly time frame. And nothing's changed structurally from my standpoint. This weekly imbalance here was a draw on liquidity. As you guys know, we were using that level here to determine if the market's going to get up into those highs. Right? One of the things that I've learned over time is it actually doesn't matter a whole lot if I can call the markets going to those highs, because I just need actionable insights for that specific week. So as long as the market's bullish, I don't need it to get up into there to get what I'm looking for in terms of setups. So what I do is I just let the market tell me where it wants to go. I don't really care if it gets up to that high. The market's going to tell me if it's going to get there. What were we using to determine that? Well, we had this weekly fair value gap here. And I said, if we're going to get up into these levels, right, the rejection block, the wick here, 50%, and then all-time highs, if we're going to do that, it would have to show me what? Strength inside of this weekly fair value gap, meaning we get up through it, we close above 50%, we use it as support, and we keep expanding higher. And as long as the market does that, that'll confirm to me that we're going to continue repricing higher, and then it'll tell me if we're going to get up into those highs. And I don't have to worry about being right or wrong and worrying about things that don't make anybody any money. So that's how I take it week by week, candle by candle, because each candle gives us new information to make a more informed decision. So what I want to see is, can we start to show strength and leave this weekly fair value gap? And then again, make a run for the all-time highs. All right, let's clean this up a bit. Take off the weekly. All right, perfect. And then here we can see the same thing on the daily chart, right? Just a lot of back and forth price action here, dropping back down into the range, leaving it, taking out the high, but still inside this consolidation range. So because inside this weekly fair value gap here, the market has not been able to really get above it meaningfully. It's having a hard time is what I'm saying. In bullish market structure, right? Like if we're looking for higher prices, look at this example here, right? Like when we were here, if you recall, we were looking at this fair value gap and this inversion, and I was calling it higher into the equal highs here and here. And we're going to see a trade through that. This is going to communicate the point of what I'm saying here. Look at this SIBI, sell side imbalance, buy side inefficiency. When the market's bullish, it does what? It trades to it and through it in one or two candles and just rips right through it. We use it as support, can't even get down to 50% of this inversion, fair value gap, and then it expands higher. That's what we want to see. That's how the algorithm's going to tell you as a smart money trader that we're really bullish if it does these signatures here. And it's all in the details. We'll now look at the difference in how we've been trading here. Has it been displacing through it in one or two candles, using it as support, and then expanding higher to the buy side? It has not. So what's that telling me? It's having a hard time getting through this fair value gap, which is not as bullish as, for example, this scenario here, where it gets above its support and it rips quickly into the highs, right? We don't have that here. So that's why right now I'm more neutral, because again, we also have the election coming up in a couple weeks. So we could stay in this range until November 4th, November 6th. I don't remember exactly what day it is. Let me check. It'll be on the calendar. Oh, November 5th. Yeah, so I was half right. So November 5th is when we have the presidential elections, when I'll be expecting the market to leave this range and trade much more cleanly. So until then, for me, it's essentially going to be a scalper's market, meaning I'm going in and I'm trading just intraday liquidity. So I shared top-down analysis in my video again yesterday, and I share how I look at the daily, hourly, 15, 5, and 1 minute. When I don't have a clear daily bias, what I then have to do is use my hourly chart like a daily chart. And if the hourly chart isn't clear, then I have to go into the 15-minute and frame intraday scalps. So when I say it's a scalper's market, that's what I'm meaning. Or that's what I'm indicating. It's a market where I'm going in on the 15-minute time frame. I'm looking surgically at intraday liquidity pools, and that's what I'm generally doing for my trading. When I have a daily bias, I'm able to do a whole lot more because I can see setups miles away before they happen. I can see what's likely to set up. I can anticipate it, pyramid, and do a whole lot more. But when it's a scalper's market, because the daily chart isn't clear, it's still in a range. It's indicating it's not strong because it's not able to get up through that fair value gap, but it's also not bearish either. So what does that make me? Neutral to bullish. So when I'm neutral, it's again more of a scalper's market where I have to be very surgical. I have to know what I'm looking for, get in, get out, and get paid. And that's usually what I'm doing on non-farm payroll weeks anyway, which is why, like I said, it wasn't really my intention to go live today, but I still wanted to share these insights with you. And if it is helpful, do hit the like button. It's very helpful for me to see that the insights I'm sharing are helpful, are providing me value, and again, keep me motivated to come out here on the YouTube with you guys on Sundays. So with that in mind, that's what I'm seeing on the daily chart. I'm neutral to bullish. I'm not calling a top in this market, but it's also giving me indications that it's not that bullish because we're not able to leave this daily fair value gap decisively, get above it, and keep ripping higher. Let's drop down to the hourly time frame. This is last week's trading. I'm going to go ahead and take all this off here now. Zoom out. So for the longest time, we'd been stuck in this range here from this low to this high. And we've just been in a consolidation, right? So tradable, yes, but it requires surgical scalps. You have to know exactly what you're looking for. Like, for example, on Wednesday, traded the shorts into the equal lows, and that's all I could see, right? That was the only easy, obvious run that was in the market. And after that Friday, was able to see an obvious, easy run into these highs here, here, and here. And again, just surgical strikes. Find what you're looking for, watch it deliver, and be done. So with that in mind, that's what we have going into this week. Right, the market traded higher. I wanted to see, okay, great, we left the range. Now, can it just keep displacing and leave that range to the upside? No, it can't, right? It traded up and immediately nosedived back down into the range. So what does that put me in the position of as an analyst is now I have to be patient because there's nothing clear and obvious for it to go to. It swept the highs and immediately traded back down to the range. That's not indicating continuation for me. But I also don't want to short this market. You see how that just puts you in an interesting place as a trader? However, I can still get to my desk tomorrow morning, frame liquidity on the 15-minute chart, and scalp intraday and find setups every single day just doing that. Like I said, top-down analysis is what gives you precision. It's what gives you the understanding of why you're doing what you're doing in the lower time frames. It is not needed for intraday trading now. So if, let's say, I don't have a clear weekly, daily bias, that's fine. I can go into a 15-minute chart and scalp intraday liquidity pools all day long. So saying that to say, that's the game plan for this week. That's what I'm going to be doing. Also coupling all that with the fact that on non-farm payroll weeks, I'm generally not using daily bias a whole lot anyway, because I like to be fluid. I like to not be stuck in a bias and let the market tell me what it's going to do for that session. So that's how I keep myself flexible and being able to adapt to the new information that the algorithm is providing. So I hope the review was insightful. I was able to get that done in what, about 20 minutes. Pretty good. Pretty good. So now, before I get going, I said I would take some questions. Let me take a look at crude oil, and then let me look at crude oil, take a few questions, and then look to get back to enjoying this lovely Sunday. All right, daily chart. I need to go to CLZ 2024. So yeah, still stuck in a sloppy range, right? And a lot of that is because of the war-related stuff going on. Every time it's war's escalating, oh, now they're talking about peace. War escalates, peace, more strikes, So what that does is it puts these assets in a very indecisive place because it's constantly new sentiment, new ideas, new talks about peace, new talks about escalation of war. So it's very difficult for crude oil to pick a direction with all that going on. So crude oil also remains a scalper's market, right? Weekly chart from low to high. Market remains in a consolidation. And there's nothing clear on the weekly time frame for me to point to and tell you that's exactly where it's going, right? So because I don't have that, what does that mean? We refine it down through the time frames. So the market's dropped down, traded into this imbalance here. Bodies are respected there, which we'd want to see. Trades higher, down close candle, bullish order block, find support. So what I want to see is if this is an order block here, would want to see this act as a propulsion candle because it's down close candles that have traded into the former down close candle, and would want to see if that can lend support and expand higher. So we'd want to see if this can act as a propulsion block. And because there's nothing clear top down on crude oil right now, it's just going to rely on reading order flow day to day, being fluid, letting the market tell you what it's going to do. And that's what it is that I'm looking for. If we find support in these down close candles and expand higher, then the draw would be closing in this entire inefficiency. And then we look for the market to gravitate up into those levels. And then how and if, or how and when we trade there will indicate what it is that I'll be looking for. All right, let me see what questions you guys got for me here today before I get going. Zach, hello. Tom, what's going on, man? Larissa, ¿crees que las elecciones? Yeah, so really good question, Larissa. So do I think the elections are going to affect this week that much, or more so the next week? It's definitely going to be impactful for the previous week, this week, and the coming week, because presidential elections is a big factor on sentiment. Because again, one of the big things that has to be considered is what elections are and what's actually happening in elections. Elections is just manipulation of folks that don't understand how the system works. So I'm saying that to say, if you turn on the news, what are they going to say? Oh, the market's been really good under Biden, or Trump's very good for the stock market. And that's laughable to us because we know it's actually the AI that controls the market. So that's pretty funny, huh? But on the side note, let me reel that back in. With the elections, they use it to manipulate sentiment. So they're telling people on the news, oh, well, if Trump gets elected, that's really good for the market, when it really doesn't mean shit because it's all rigged anyway by central banks. So it's funny how that works. So what they do with the election is they manipulate people's sentiment. So they get people to think, oh, Trump's going to be in office, the market's really good, or Biden's been doing really good for the market. So what the US elections mean for the market is very significant from a sentiment standpoint. Because what these markets are is they're a casino. And what is a casino? A casino is where the people at the top take the money from the people that come in and bet at the casino. So what they have to do to get people in their casino is they have to inspire sentiment, either bullish or bearish. And then when that's the case, they're able to have people come over to the casino, risk their money. Who's cleaning up? The people at the top, right? So saying that to say, they use elections to manipulate people. Oh, Trump's going in office, the market's bullish. Okay, come bring your money and put it to work in the market. Who's going to take that? Smart money is going to make sure that's taken care of. So I'm saying that to say elections are highly manipulated events because of the sentiment standpoint. And they want to bring more people into the markets to gamble their money so that smart money can fleece their pockets and take it for themselves. So if we understand that's how the markets work, it's going to be extremely manipulated around presidential elections. Hopefully that makes sense. I know it requires a lot of other things to come together to understand that, but it's pretty straightforward. Chris, what do you expect after the election? So after the election, in terms of price action, I will be expecting much cleaner price action, because after the election happens, in my mind, that's when they're going to start letting the markets go and run to the higher time frame key levels that we're looking for. And in my mind, the trading is going to be very, very nice after the elections, because the ranges are going to open up. Market's going to be running a lot more to liquidity and efficiency and running on the sentiment that's being engineered in the marketplace. There's going to be a lot of opportunities, because think about it logically, right? What happens after the election? Investors are going to put more money to work. If investors are putting money to work, there's entities in these markets that are designed to clean up and take their money. So there's going to be a lot more price movements after the election, because there's going to be a lot of money on the table for the taking. Mr. Nuller, you definitely got my like. Your insights are very insightful. Really appreciate that, sir. Zeke, thanks for coming on, Dylan. Absolutely, my pleasure. Lael, scalp all day long. Come on, bro. You would have been rich. How do you know I'm not? Taj, thank you. Absolutely. Ahmed, hey, Dylan, why not chart with NQ continuous? That's a good question. Let's look at NQ1. All right, so looking at the continuous contract, one of the reasons why I don't use NQ1, and I think I've answered this before, but it's a good question. With the actual contract month, I'm able to see liquidity and inefficiency that wouldn't be there on the continuous contract. Because what is the continuous contract? It has all the previous contracts together. So in the current month contract, you're able to see inefficiencies like this here. Or, I mean, this is just really spotty, but for example, you're able to see imbalances like these here, which if we go to the continuous contract, those are cleaned up, right? The algorithm is delivering price based off the current contract. So it will use these inefficiencies, and I like to have those data points in my trading. So it's really just a matter of your style of trading. That's why I specifically use the continuous contract, again, in summary, because I like to see inefficiencies and these discrepancies in open closes and these gaps that many wouldn't see using the continuous contract. I like these data points because I like precision in my trading. So for me, I personally like to use the the current month contract. Can you use the continuous? Absolutely. It just depends on your trading style and what factors you're weighing in your trading. I like all these algorithmic levels and reference points in my trading. So for me, it's helpful, and I would not have those data points if I wasn't using the current contract. But I do know people that are making lots of money just using the continuous contract, and they don't need those levels. So it just really all depends on your style and what it is that works for you when determining what contract to use. Great question. Joe, CL. Yeah, absolutely. Covered CL already for you, brother. Great question. NQ, continuous contract. I mean, yeah, I got you. I understood you. Reaper, any idea about gold? Look, for gold, we're looking higher, brother. For gold, we're looking higher. Let's go to gold. Just keeps ripping. Gold is going not just higher, but much, much higher. And especially if you guys saw what happened this past week with the BRICS nation and what they're doing with a currency that's going to then rival the US dollar. There's just a lot of things going on the horizon right now. So gold, we zoom out, is not just a little bit bullish, it's extremely bullish. Why? Look at all the stuff that's going on across the world with WAR. Look at the things that are going on with the currency, right? What's going on with the US dollar? If anyone's looking at the, oh, look, man, make this an interactive session, man. This is better than a university course. And with the university course, you're having to pay a shitload of money for stuff that you're learning that isn't even helpful. But what I want to show you guys is the debt clock. So what you'll see here is the debt is 35 trillion and counting. So I say that to say, guys, if you understand the financial system, it's a Ponzi scheme, right? The currency is worth nothing because it's backed by debt. So this number here, it keeps rising. What does that mean? Well, as they print more dollars, it's going to steal value from dollars that already exist. So I'm saying all that to say, why is money going into gold? Because people that are intelligent and have a lot of money, they're intelligently managing their money and doing it strategically. Anyone that understands anything about preserving wealth understands diversification and how to manage their wealth very, very well so they can keep what they've worked to build. Putting money in the US dollar, when you see the national debt screaming higher and only going much, much higher as they continue to keep bringing up excuses to print more money, the currency is going to keep being worth less and less and less and less. So you notice housing prices are going up, food's much more expensive, cars are much more expensive. That's not going to change because the debt is growing, meaning the currency is worth less. So if you understand that, you're going to understand why gold is going higher, because people with money want to keep the wealth that they have, and keeping it in a piece of paper that's losing value isn't a smart investment idea if you have this understanding. So what they're doing is putting money into gold. And I'm not saying that buying pressure is moving it higher, but there's real fundamental factors as to why gold's trading higher. And a lot of money is going into this market because of those factors there. And there's a economics 101 course that take a whole year to learn in university. Giving it free here on YouTube. So you guys can see how those factors come together. So I know that's a long-winded way to answer your question, but gold is not just going higher, it's going much higher. So keep trusting buy models in gold if you're trading it. If you're investing in gold and you actually have gold coins and you're absolutely banking, I would hold on to them. Larissa, makes sense. Thank you. Awesome. Jose, muchas gracias, maestro, por tu tiempo y conocimiento. Gracias a ti por venir, amigo. Frank, thank you, Dylan. Absolutely, Frank. Appreciate you joining, brother. Mr. Nuller, can we get your thoughts on gold? It's a bullish rally related to the geopolitics. Absolutely, yeah. So there's actually a lot more factors behind gold going higher. The geopolitical side is one thing. The political side is another thing, but also understanding what's going on with the money and the currency. And like I said, intelligent, high net worth people, they're very well educated. They are not just educated by the public school system and university. They educate themselves on all these matters because you can see to get wealthy, you have to know a lot of things. And then not only do you have to know how to get wealthy, but now you have to know how to preserve that wealth, right? And people that you don't get rich from being dumb, right? So they're taking all these things into consideration and they're putting their money where it can work the best. Gold and even silver. Silver's a sleeper, in my opinion. I think silver's going to do very, very well long term as well. So silver's undervalued. If you look at the debt to gold ratio, that'll tell you gold's undervalued. But then if you look at the silver to gold ratio, or gold to silver ratio rather, you'll see that silver is very, very undervalued historically, considering debt and all those other factors. But like I said, I can turn this into a PhD session, but it's not necessary. Chris, thank you for your answer. Absolutely, brother. Justice, hello, Dylan. Is the Telegram free channel still available? Absolutely, absolutely. And insights are being shared every single week there on the Telegram. And you can also join the Discord for free as well. We've recently opened up our Discord for free. So you'll have access to some channels, and we'll be able to share information and resources there if you want to be more connected to what it is that we're doing. But if you don't want to miss anything, I would recommend putting your email in our newsletter on our website, or there'll be a link below to give us your email. And there's no spam, there's no promotions, it's all value so that you guys can stay connected to when we're uploading YouTube videos, when we're doing webinars, value that we send week to week, teaching you guys how to do what it is that myself and my team do every single week. Little Jeff Bezos type of rich, yeah, that's a whole nother level. That's going to take some time. That's going to take some time, a lot of compounding. Ahmed, thank you. Yeah, absolutely, brother. Joe, thanks, Dylan. Yeah, my pleasure, man. Z, thanks, brother. Have been going break even for 3 weeks straight, and Q has been messing up, looking for an opportunity on YM. Here's what I'll say, Z. Good point that you have there. It's not been easy trading NQ as of recently, but if you're break even, you just need a little bit more to push you over to profitability. Break even traders are so easy to work with and take to consistent profitability, because if you're a break even trader, what you're already saying is I have a model and I have self-control. And if you have those two things, that's the hardest thing to get in trading. And then now once you have a model that you like, you have self-control, now it's just removing a few barriers and now you're a profitable trader. So profitable trading, if you're already break even, is actually not that far from what you may think it is. But looking for opportunity in YM, I personally don't like the Dow, but I know people that trade it and do very well. So it's just all a matter of what's your personality, what makes the most sense to you. I can't stand the Dow personally, but it's all about, again, what makes the most sense for you and your trading. I know people that absolutely bank on the Dow. So it's all about what makes the most sense with your strategy. Moen, hey man, can you do Euro since it's bearish? Yeah, that's a great question. So trying to think how I want to answer that. Check out what I was sharing on the dollar. The great thing is these YouTube streams will be up. So what I recommend is go to the earlier part of the weekly outlook, the presentation, where I'm covering US dollar, and it's going to be the exact inverse for Euro. So everything I'm touching on the dollar, which the institutional order flow entry drill, the breakaway gaps, it's targeting the fund level stops, the swing highs on the left side of the curve, easy money to the upside. Just reverse that on Euro, and it's the same exact thing. And I even touch on Euro as well. So I made a few pointers on Euro, just showing how it's the inverse of the dollar. But take in what I'm saying on the dollar, and that'll give you everything you need for Euro. And it has been bearish, and it's likely going to continue much, much more bearish. Yeah. Alez, which futures broker are you using? So I use two personal brokers. I have one with AMP Live, which is a personal broker that I use and is also a business arrangement. I have an institutional account with TradeStation. So as you know, some of you guys may know, it's a little bit about myself and the business that I run here. We're not just selling Discord seats. I profitably trade, my team profitably trades, and we manage money for our business. So I have an institutional account. And the reason I'm going into all this is because I can't recommend TradeStation or AMP, because the relationship I have with them is an institutional relationship. And it's very different than if you're just going in for a personal broker, because I have a business relationship with them, if that makes sense. So I use TradeStation on the institutional side. I use AMP with the business agreement that I have. And that's what I use for my personal brokers. They're great. I don't have any problems with them. I'm not recommending any of them. You do have to do your own research and see which brokers fit what it is that you need. But those are the ones that I use, and I don't have any problems with them. But I'm very careful not to recommend brokers. That's not something I do. They're not paying me nearly enough to promote them. And it's something that I always recommend do your own research on and figure out which one's the best fit for you. Therios, good job. Do you have a daily trading room that people can join? Yes, sir. So I do have a exclusive Discord community where I do live trade. My team and I call the market every single day, just about every single week, unless it's a lower probability trading day. And, you know, one of the things that we also teach and emphasize a lot on in our community is when not to trade, right? How to actually keep the money you're making, when to be disciplined, how to know when sessions are going to be difficult. And we call all those things before the fact. So it's not live trading every single day, but it's every single day that our analysis calls for a higher probability trading session. So yes, to answer your question, we do have that. Chris, speaking of NQ1, what do you think of the gap when you toggle adjustment off? Do you ever look at that factor in gaps as a draw, or do you look at where the gap overlays to the current contract? Great question. So that would be called a roll gap. So the roll gap is from the continuous contract, and we can see that there's a gap here and here from where we transition from one contract to the other. I'm not using that gap because I'm working with the continuous contract. So when you're using the official contract, there is no gap there. So personally, I'm not using that gap in my trading because I'm using the current month contract. So I personally don't use that. I'm not saying it's not something that is useful. I'm not saying it's something that you should or shouldn't use. I don't use it. I don't need it for what it is that I do day to day. Les, thanks, Dylan. Absolutely. Yeah, my pleasure. Therios, thank you. Absolutely. Thank you for joining. Give the stream a like, everyone. Let's show some love to AT. Appreciate that. Thank you very much. Alrighty, guys. See the questions starting to fizzle out. Hopefully I touched on everyone's question that did have one. And that if you did have a question, hopefully you're able to get that sent in. Don't be shy. I know many of you guys have questions. And if I say I'm making myself available, it's encouraged. So don't feel shy about asking any questions. But with that, folks, that's going to be it for me here today. Hope this one was insightful for you guys on how to prepare for the upcoming week for non-farm payroll. With that in mind, community will be live tomorrow morning, live trading, and Tuesday morning as well to get it sorted out. So with that, guys, I'll see you guys there. If you're not in the community, have a blessed rest of your week. We will be sending insights as usual to the Telegram for those of you guys that maybe aren't able to invest in yourselves. Still want to give you guys free value, free education. So we got much more coming up on the YouTube side of things as well. If you haven't checked out our YouTube video that we already shared, be sure to check that one out, and we got more coming. So I'm going to have a full playlist for our free YouTube channel for you guys to learn from. So that, again, even those that aren't able to invest in themselves, take their trading to the next level in the most streamlined way possible, I want to make sure that even you guys can still get the resources you need and are still able to get the value that someone may be getting in the premium service. Hit that like button, folks. Very much appreciated. Thank you, Dustin. Appreciate you guys watching. Rise up. Thank you. Thank you, guys. Have a phenomenal rest of your Sunday, guys. I will see you on the next one. Take care. Have a beautiful rest of your week. Bye, guys.